Relief rally or short squeeze? Today, we're going to give you a data-driven guide to Bitcoin's developing trend. Hey, guys, it's Keith Allen. Hope you're having a good week. A little bit of volatility going on, and I, quite frankly, don't expect that to end anytime soon. We've got some interesting things developing in the charts, some of them not so good, some of them pretty good. We'll take a look at it all and see if we can make sense of what's happening now and where Bitcoin price might be going from here. If you are new to the stream, welcome. I appreciate you being here. My name's Keith Allen. As I said, I'm a co-founder at Material Indicators. I'm going to share some of those tools with you today as we jump into today's analysis. And we'll marry that, of course, with some technical analysis as we typically do to gain a broader perspective and gain some insight on what is developing here in the market. If you haven't done so yet, do me a favor and smash the like button and the subscribe button, especially so you don't miss any of the future streams. Heck, share it. I'll give you 5 seconds right now to share it with a friend so we can grow this thing and get some more folks in here. And by the way, live chat is open on YouTube. So if you would like to engage, I'd love to have you. I always enjoy engaging with you guys. If you have questions, if you have insights you want to share, I always enjoy hearing that and sharing that as well. So without further ado, we're going to jump in. And today we're going to start on the candle chart where we have both trend precognition algos showing us long signals on the daily, but there's a lot more to this developing trend. So let's start with this one right here. And as you can see, we have a nice green arrow here. This is the trend precognition A2 plus algo. Down here, we have a green dot. That's also a long signal on the trend precognition A1 algo. And the A1 slope line, that's this orange line here, is on an upward trajectory and a pretty robust one as well, I might add, which indicates that there is strength in the momentum. However, all is not well in the market. You see my little fun little skull and crossbones here. That's indicating not one death cross, but we now have a second death cross developing. It will be printed, I guess, by today. It looks like. I mean, it's too late for this to pull out of the crosshairs now, I think, but it doesn't have to be a deep cross, right? It could be a shallow crossing and maybe a quick recovery. For now, we're seeing a nice, a decent recovery off of yesterday's wick that went down to 93.3. Quite frankly, I was looking for a little bit more. My bids didn't quite get filled where I wanted them. I was really expecting, and somebody just asked me in our Telegram community where I thought the dip would go, and I was expecting to be closer to this prior support level around 91.5. And to be honest with you, I wasn't even sure we were going to go that low. I was expecting a higher low from this wick down to, that went to 91.5, right? So right to that range. So I was expecting something closer to the 92s. It didn't happen, but that does not mean it might not. So I did not ape into the trade yesterday. That may come back to, bite me in the butt, but I'm sticking to my guns on this one. Looks like we got a couple comments already. Hey, Santos, price ain't breaking down, so I stay long at least till 104K. Oh, if JP is not dovish to moderate tonight, I might sell some. Well, you're going to hear minutes from the prior meeting. So what if that's what you're talking about, that's not new. That's not new data based on anything that's happened in the past week or two, or whenever his last deal was. So I do like the strength and the macro view of the market. After all, we have these death crosses happening on the daily. The weekly still looks pretty solid here, as there's no winding or crossing of these key moving averages. So we're in pretty good shape right there. The monthly is doing about what is expected, at least based on our last trend precognition signal. We're down 6% roughly on the month, which isn't horrible. I mean, quite frankly, if we stay above this trend line, or even anywhere above this range, I think that's healthy. So I don't mind a little pullback here. I see that as opportunity. So going back to the daily here, I do like that we've had this prolonged consolidation in this range. I like that a lot, as a matter of fact. So there is opportunity here, but because we have this death cross looming, these are, as I mentioned previously, these are lagging indicators, but the momentum tends to carry a little bit until we get a reversion. So let's see. Albert says, hey Keith, unironically, I think that Bitcoin is going to make a flash crash into the 75K range with a beautiful V pattern recovery and finally new all-time high and open gates into the 200,000 to 250,000 range. That's not a crazy theory. And for those who are wondering why, I'll show you why. What do you say? The 75K range. Okay, so let's look at where things actually sit here and look at what our prior consolidations were. Okay, our prior RS flip level. And I'm gonna take the trend precognition signals off the chart so we can get a cleaner view here. Our prior consolidation level, right? We consolidated here briefly, right? The bottom of this range. And I only built this because at the time, we had this was literally the election day Trump pump. We needed some sort of support level, some sort of consolidation level to grab onto. And that left this bottom of the range. And then we went to the top, found the top of the range. And so far we've had, let's see, 1, 2, 3, 4, 5, 6, debatable, 7, 8, 9, 10, 11, at least 11 support tests of this level, which to me validates an RS flip, of course, until it doesn't, right? Until we see a breakdown that's validated. We thought we were going to get that RS flip here above 100K, but it didn't happen, right? It broke down once, it broke down a second time. And so we aren't there yet. Eventually we'll get there. But in terms of that 75K range, so we have our real long-term consolidation range was under this 69K level, which was the 2021 top, right? And so we cracked above that finally in on election day. We had hit it a couple of times, right? But we broke down each time. So we finally broke out of that on this Trump pump from election day. If we were to return to those levels, okay, I've talked, and if you're new to this stream, maybe you haven't heard it, but I've been talking for a long time about a potential deeper correction, as we have seen historically in every bull market, and at every post halving cycle. We've seen deeper corrections in the 20 to 50 and 60% range. And so while I don't think that we have a 60% correction coming at us, it is conceivable that we could see a pullback from all-time high, which sits at about 109K right now. If we were to get that deeper correction, the 200-day moving average would be at 80K, and the trend line would be around that 76K level, which incidentally, we have a CME gap down here as well. Now, in terms of going lower, I'll show you why there's another target that could take us a bit lower than that, and that is where, as you can see, we have confluence with the 50-day, the 50-week moving average, which is now up to about 75K, just shy of 75K. And so, we often get an overshoot on these technicals to shake out the algos and some weak hands. So we could certainly be anywhere in this range between that 2021 top, the trend line, and the red 50-week moving moving average. Um, so I do think that target in the 75K range is um, is a possibility. And I'll be honest with you, it's a place I have bids placed just in case it happens. Now, I'm not just wasting powder. I'm stacking powder uh, to be able to take advantage of those opportunities. And thanks to some yield on Coinbase, I'm getting I'm getting a little bit of yield on like 4% on that. So I'm good with that. I'm good with having that money sit there and be ready for opportunities should they present themselves. Now, that doesn't mean I'm not saying that we're going there, because what we've seen lately, and especially with this administration, that doesn't seem it's seeming less and less likely that we're going to go that deep, because the sellouts keep getting absorbed here. Let's see. Santos says looking for a head short. Well, I think the shorts are getting squeezed right now. I think that we saw, and that's really my take on things, because of these death crosses. We got this recovery here yesterday, and I think shorts are going to get punished up to these key moving averages, which are forming very strong technical resistance here. Right, we have about to have a death cross, an intersection between the 21-day, that's the green one, and the blue 100-day moving averages. That's at around 97, 750, 97, 800, something like that. And then you have the 50-day right above that at just shy of 99K. And then, of course, we have our psychological and technical resistance, I guess, at this point, after we've had some time above and below that line. So there's a lot of technical resistance in this zone. And if we look over to FireCharts, we're going to see that liquidity is there's confluence between the liquidity in that range and the technicals. So keep that in mind here, right? This is a great way, in my opinion, to validate some of your assumptions, is by looking at multiple tools and getting multiple data sources to get some perspective on what's really developing in the charts here. Just did a quick refresh there on that. And again, we have a lot of liquidity stacked here between where we sit now and 100K. All of those key moving averages that I just pointed to are really right in this range. Now, let's look at some of the positives. The fact that we do have some blocks of bids moving up is a positive. The fact that we have brown mega whales with a large buy yesterday. Let's take it to the daily, and we can see exactly what that was. This was a big series of buys yesterday. Again, remember that CVD, this binned CVD, is order flow, right? And so making large market orders, multi-million-dollar market orders, is a risky move if there's not enough liquidity to support that, because you could have some major slippage. So yesterday we saw out of brown mega whales some non-typical volume coming in the shape of market orders. They started the day yesterday, flat, $1 million. That's very common. There's another million. Also common, $1 million at a time, but then seeing a jump, right? You go up incrementally, but then you have basically a 10 or $11 million jump. That's a huge market order. It's very rare. It may not sound like a lot to you, but it's rare that we see that much volume in a single market order, and that did occur yesterday. 15.7. Then they kept adding to it. This isn't necessarily or likely the same entity, right? Adding millions after millions, and then 11 million, and then a million more, and a million more. This is multiple whales playing this game, in my opinion. Ultimately ended up with how did we end up yesterday? Or this is the last rolling 24 hours, 17 million out of that order class. Meanwhile, yellow or orange, however you interpret that, did about 2.6 million in volume yesterday. That's not necessarily retail. Retail obviously lives in that class, but you can also have, some well-controlled bots, working in that range as well. Santos says, I got the feeling OTCs are buying up the dips constantly, and there was a very clear TWAP from class. Yes, there was a very clear TWAP that we had seen earlier in the week. And some of these, I identify those as really kind of the smooth trajectories, smooth and steady, without a lot of wiggle to it. And often over time, you'll see a nice, kind of steady incline, similar to this, right? Again, retail lives in here as well. But when you see moves, let me take this tool out. When you see big, sloping moves here that are higher volume in a short amount of time, that's often a well-controlled TWAP bot. So there may be a little bit of that going on here, and then you have retail kind of interacting with it as well, and that's kind of what's making up that order class. But just some insight on how I interpret the binge CVD. Yes, that's insightful. Albert comes back with also finally going to make. Oh, hey man, I appreciate that. Thank you very much. He loves the trend precognition indicator and a lot of the other ones. I do too, man. And listen, I'm not just saying that because I'm a co-founder in the company. I'll be honest with you. These are the tools that I use day in and day out. And that's why I share them with you. And I have confidence in them because I've been studying them for years. Listen, no indicator is 100% all the time, and I won't claim that ours are either. But I found them to be very, very helpful. I went from getting my teeth kicked in early in my trading career without these tools to getting a better understanding of the market, a better understanding of risk management, and utilizing data to help me make more informed decisions instead of speculating. And FireCharts is one as well that I just, this is, I consider this a window to the order book. Like you could look at a candle chart and you could speculate, you go, okay, well, we got some resistance here. We have some technical resistance here, and we have some support here, and that's all well and good. But when you can validate that with data visualization tools that tell you, hey, you got a stack of ask liquidity here, and it's going to be really hard to cross this level. But hey, I was looking at that 90,000, 91,000 level, but gosh, it looks like there's bids coming up higher than that. So maybe we're not going to reach that level down there. Right. And you can see bids are now stepping up into this range. And this could be some positioning for a number of reasons, right? They could be trying to push price up and get filled up here. Or they could indeed have intention of getting filled down here. This may be some, how should I say, liquidity herding to keep price kind of in this range. Tomorrow we have, we have FOMC minutes coming out later today, and tomorrow we have some new economic data coming that could trigger some movement. And so watching where the liquidity moves gives us an idea of how price is going to react. So I always am in tune to the liquidity dynamics in the order book, as well as the order flow dynamics in the order book. So, take that for your tutorial, and thanks, Albert, for the helping me get to a shameless plug. So back to the analysis here, right? The situation here is at the moment, this would look like a decent support level here at what is this, 94, about 94.5, right? And so $9 million may not seem like a lot, but it's a significant size for a single level bid block, and it doesn't take as much as you think it takes to move price and move the order book. So would you like to see more come into place to support that? Absolutely, right? To really support it and fortify it. But the fact that we have this here and another block down here of 12 million, and then another 16 million down here, and another 9 million here and another 18 million here. We're getting some strength here, and price tends to not go all the way down to where the biggest buy wall is. So this may be insulating the downside, whatever it is. It's dampening the volatility for right now. It's keeping price pinned in this range between 94.5 and I'd say 97, 97 and change, which is, of course, exactly where we have this confluence here, right at, 97, 750. So keep that in mind. Now, do I want to see a breakdown? I would like to see price come back down and fill my orders that didn't get filled yesterday. But I do think that there is an opportunity that we could have a breakout at some point in time, because we're starting to hear more news that might facilitate a risk-on scenario. And one of those big things is this was either yesterday or today, where Elon and his Doge, Department of Government Efficiency, have found so much waste and fraud, according to the administration, that they are contemplating a $5,000 tax credit to American taxpayers. Okay, well that smashes what COVID relief checks were, and so that is essentially that's an indirect way of turning on the money printer. An indirect way of QE, if you will. So there's that. There's also the fact that the current administration has been going through massive firings and layoffs in federal jobs. Now, most of those employees, I think, were all offered exit packages. And an exit package, somebody taking that deal, taking that buyout is better than getting fired, and especially in terms of what it means for unemployment, right? Those who took buyouts aren't going to be filing for unemployment, whereas the others will most likely be filing for unemployment. Keep in mind, you need to be unemployed for 3 weeks in the U.S., I believe it is, until before you can file. So there were tens of thousands of firings in the past week. Those may not show up on this week's, on this upcoming report, but they will show up soon. And so by next month's unemployment report, we could see a spike in unemployment. And guess what? What does the Fed want to see to cut rates? Exactly what the current administration has been asking for. They want those rate cuts. A spike in unemployment would be a data point that the Fed is looking for to get to rate cuts. So keep that in mind. Albert's saying, ouch, if they're really going to switch into QE in that weird way, we're definitely living in a simulation. They don't want to literally turn on the money printer, because that's what got us into the inflationary problem that we're in now. And so I'll preface this by saying I'm no economist, but this is a way to basically inject liquidity back into the economy without actually turning on the money printer. So just food for thought, if you will. Gosh, this is fun, guys. I really love engaging with you guys. And I'm actually a little bit distracted from the point I was making here in terms of the chart. So, bottom line is, right, we have this death cross. We've already had one between the green 21 and the red 50, and now the green 21 and the blue 100-day moving averages are eminent. This could end up being kind of a shallow deal like we've had on some other occasions. And I'll look to a point where we've had, here we go, where, not where everything was wound up or crossed, but where we had the 21 crossing the 50 and then the 100. And here's an occasion where it was very shallow and didn't take very long to rectify itself, right? There was a spike and then a reclaiming of the key moving averages, right? The green 21 unwound from the 50 and the 100. There was a recovery. Of course, there was then another breakdown, and support was found on the 200-day moving average. So this is something that we have to watch here, right? For this to the fastest way for us to get back to bullish and back to upside price discovery and new all-time highs is to recover the 50-day moving average, get daily closes above that level, and start the unwinding, right? And so once we get above here and close above here, then we can work on closing above the 100K level, consolidate here before working our way back up to all-time high territory. If that does not happen, if Bitcoin fails to recover that 50-day moving average, you can expect more downside. And whether that downside holds support here in this level, which, as I said a few minutes ago, and I showed you on FireCharts, I don't even know, the current liquidity dynamic is not likely going to let us go even quite this low. So as you can see, we do have support moving up higher, 92, 93, and as high as 94, 500, right? So this is local liquidity-based support at the moment. A little bit giving way here to the upside could open the door, but this suppression is still going on, right? It's not a lot of volume right here, but it's enough to keep price down. And until we see these purple whales, especially coming back in with volume, I would expect to grind lower a little bit. And so what we want to see and what we don't want to see, we want to see this recovery here. What we don't want to see is price getting down below this 200-day moving average. I mean, maybe we do, right? It'd be an unbelievable buying opportunity, but we're a long way. This would be a just from where we sit now would be another 15, 16% correction from where we sit right now. And as we spoke about at the beginning of this of the stream on Albert's comment that, yeah, we could get down there to that 70, 75K range, and that is entirely possible. And quite frankly, I would welcome it. I have the bids. I have bids sitting there to do that. And in fact, I was prepared for that when we started breaking down from up here. And so at this point, I did sell some of my position. Pretty much everything I bought above, I want to say like 86, certainly above 90, I've sold. So I think my highest entry in my position right now is around 75 or 78K. And my dollar cost average entry is sub 50K. And so I'm pretty happy with where I'm at. I'd love to add to my position, and I'm looking for these. I view this as a buy zone, certainly, and anything below it a buy zone, most certainly. But I'd love to pick up a little bit more and buy back in with what I had sold at a decent price here. Let's see, what is Albert's asking, what are my thoughts about Bitcoin National Reserve talks? Are they really going to create this fundamental big thing in 2025? That's a great question. And it takes more than just, although it's hard to challenge it, but it takes more than just what the president wants. Okay. He seems to be getting everything he wants these days, by the way. But it will take an act of Congress to do that. That's one component. He could, if he wants it, he'll likely get that act from Congress. There's a couple of moving parts in here. One is there is also an audit going on, or allegedly an audit coming up for Fort Knox for the gold reserve. So that will be interesting to see what is there and whether or not, number one, everything is present and accounted for. Number two, if there is a decision to sell some of that gold for Bitcoin. And the current proposals on the table are how should I say? Well, the one from Cynthia Loomis, from Wisconsin, I believe, is for the U.S. to buy like 100 million Bitcoin over, I think, a 10 or 20-year period. So buying Bitcoin is different than seizing Bitcoin or even mining Bitcoin, right? And so the U.S. obviously has some seized Bitcoin, and I know Trump's original proposal was to not sell any of the seized Bitcoin, and likely to hold any future seizures of Bitcoin. But I haven't heard any proposal to mine, and I have not heard anything from the administration saying that they were going to start buying. Now, if they do, even if they announce the strategic reserve, and there's been a discussion of a crypto stockpile or a digital asset stockpile, which led to some controversy over the fact that initially, and what he campaigned on was Bitcoin strategic reserve, and then it turned into crypto stockpile. Like a couple of days after he launched his own meme coin, which is now down 60 some odd percent. So there's that's a little grifty for the market, I think. So a lot has to happen for this to develop into a real strategic Bitcoin reserve. If it does, I would expect a bit of a I don't know if trade war is the term, but there's going to be a battle between nations, especially China and Russia, who are also going to be trying to build their reserves. We know that that's happening in the U.S. right now. Different states are actually putting on their legislature on their legislative calendars proposals to start Bitcoin reserves. I think Texas may have already even done it. Verify that for yourself. I haven't verified that, but I know that they've been hot and heavy on the concept, and many other states have as well. So that could all be, those are all bullish in my mind. Those are all fundamentally bullish things that could improve the price of Bitcoin. Now, note that seizing and holding seized Bitcoin is much different than buying Bitcoin in terms of how how price might react to it. But if we have the U.S. and conceivably Russia and China and other sovereign nations buying up Bitcoin, that's obviously something that could facilitate much bigger, a much higher six-figure top for this cycle, and potentially a 7 or even an 8-figure price in 10, 20 years from now. So those are all things to keep in mind. Santos comes in with another one. You put some money on the CME gap, I reckon. Yeah, I did down by the lower end of that gap, just in case. And again, I'm not, I've early on, I had a lot of idle money, and it was, there's an opportunity cost. There's how should I say, mitigation of risk by not being fully vested, right? Having some of that dry powder sitting by. But there's also an opportunity cost. And so I'm currently trading on Coinbase as a US trader. And they are offering some yield on my USDC, that's sitting on trades. So, waiting to be filled. So the fact that I'm making money on that is okay, especially when the market is trending down a bit. So there's that. Guys, this is an awesome call and live stream. I really appreciate all of the comments and questions. It makes this more fun, and it helps me deliver more of what you guys want. So keep them coming by all means. If you didn't catch this live and you're watching it on the playback, you can share a comment on YouTube or X or wherever you're watching. and I always enjoy engaging with those as well. I'm going to leave it right here for now, guys. I'll leave you with a parting shot of FireCharts so we can see exactly what's happening here, and maybe if we have any changes in development. You can see this is now turning into a nice little bid ladder here, extending up to that 94.5K level with secondary support down at 93. I would love to see a trip back down here so I can get some orders filled and take it from there. Albert with one last comment here. Overall, it does appear that there is no indication that the bull run will stop here. I agree with that 1000%. Everything seems so shiny and cloudless, which makes me scared at the same time. Yes, well, know that there are no straight lines, but if you are, if you're a day trader, you're interested in all of this intra volatility. If you are a long-term investor, then you know, uh, sitting on your hands is a strategy. And so, if you are of the view that over time, Bitcoin is going to once again be a six-figure asset, and that the top is not in at 109K, then you're in pretty good shape just riding this out. It's really difficult to beat the market, especially when we have so much how should I say, choreographed moves in the order book that are influencing the price action, especially on weekends, right, where we see a lot of crazy stuff going on. So, you decide what you want to do. If you're a long-term investor, buy and hold is hard to beat. If you don't have the stomach for the intraday or intra week or intra month volatility, then do what you need to do to mitigate some risk and sleep well at night. I personally have like I said, taken a little bit off the table. I have some dry powder ready to deploy when the opportunity presents themselves. Going to wrap it right there, guys. Hope you have a fantastic rest of the week. We will be back very soon, likely tomorrow with another analysis. But and as always, if I see anything developing that's really noteworthy, I'm going to do my best to keep you guys updated throughout the day. Albert, Santos, and everybody else, I really appreciate all of the engagement today. Thank you, guys. We'll do it again very, very soon.